how do taxes impact your number? And I'm talking about the number that you need to have saved in order to retire comfortably, securely, cover all of your needs over all of your retirement years, and still have money left over at the end. Well, obviously taxes are an expense. And so the higher your taxes, then the greater the money you're going to need to have saved so that you can pay those taxes and then cover all of the things that you want to do, have the money left for yourself and for your family to do what you want to do over your retirement. Now, the interesting thing about this study, this survey that I've been looking at, is that it tells me that 58% of boomers say that they have a good understanding of how taxes are going to impact their plan. And 46% of Gen X say that they have a good understanding and have planned for taxes in retirement. But then the study goes on to say that only 1 in 3 have tax strategies in place to minimize taxes over retirement. So the numbers are a little bit unaligned as far as I'm concerned, but there are obviously facts that I don't know about the way that they put this data together. However, that said, it's important to look at your own plan to see what tax strategies could help you minimize your taxes over your retirement. Now, the top 4 that are mentioned here are, first of all, number 1, taking withdrawals strategically from different types of accounts in order to make sure that you're filling up the lower tax brackets, but you're staying out of the higher tax brackets. That's a very important planning strategy to use and something that you have to look at each and every year, as well as have a plan for the long term. You can't just use all of the low income type low tax consequence income early on and leave only the higher taxed income later on, because then you'll find yourself in a place where you have no wiggle room. So it's got to be not only a year-by-year plan, but a long-term plan to ensure that you are making the most of your tax situation over your entire retirement lifetime. The second strategy was tax diversification and having a good mix of not just traditional IRAs or traditional 401ks, which obviously is the thing that we have all been encouraged to save money to over the years, but also adding in other types of accounts. You have your taxable accounts, you have your Roth type accounts that are tax-free. Having a good combination of different tax types so that you have tax diversification. So again, you have some wiggle room as to which account are you going to take from and how are you going to be taxed from year to year, as well as how are you going to be taxed over your lifetime. The third strategy that was on the list as being one of the top strategies is using charitable giving strategically. Now, I have a lot of clients that do this, and it can be very beneficial. It can help in big income years. It can help minimize the taxes paid on required minimum distributions. So there's a lot of room to use this if you're giving money to charities on a regular basis. Then you can make sure that that is done in a way that really minimizes your taxes over your retirement. That can generate significant benefit to you, keeping more money in your pocket, because basically what happens if you do a gift to a charity, have that count as part of your required minimum distribution, and you don't pay tax on that, and the charity doesn't pay tax on that, then you have reduced your total tax cost for that year, which basically ends up with Uncle Sam helping you make that charitable gift. And so that can be very, very beneficial. And then the fourth strategy is using health savings accounts. And those are a very, very good account. We call that a super Roth because you can get money in with no taxes and you can get money out with no taxes, and the growth in the middle has no taxes on it. And so that can be a very good place to put some money and then use that money in retirement to cover your health costs. Those are the top 4 strategies that people responded to. But again, there were only about 25 to 30% of the respondents who said they even use these strategies. And what you need to do for your own situation is say, what strategies do I currently have available to me? What strategies should I think about adding? Do I need to make some tweaks? Do I need to move some things around? Do I need to make some changes to what I'm doing in order to be able to maximize these strategies? And how can I minimize my lifetime tax bill? That's what you want to look at. That's what a good plan will do for you. And so think through that in combination with the other things that I've been talking about. Think through that very important issue to make sure that you are on your best path for your retirement.